Hey guys, it's that Dividend guy coming at you with another Robinhood portfolio update. Happy Thursday. Hopefully everybody's having a GGD, a great green day in the market. You know I always wish the best for my viewers and subscribers. So guys, today we're going to go over the overall portfolio performance, my buying power, the individual stocks, and the stocks that I'm looking to add to my portfolio. So with that, guys, let's jump right in. For today, we are up $56, up 0.11%. For the week, we are up $1,000. Here, let me get here we go. We're up $1,064.38, up 2.08% for the past week. The 1 month mark, we are up $1,600, up 3.21% in the past month. 3 month mark, we are up $5,200, up 11% in a 90-day period. That is awesome. Of course, year to date, we are up a little over $2,400, up nearly 5% year to date. The 1 year mark, we are up $2,300, up 4.7%. And then all time, we are up $16,913.65 for a total return of 47.86%. So I've had nearly a 50% return over my investing career, which is awesome. I'm happy about that. Buying power, we have $86.89, so nearly $90 of free cash. I'm just going to let that sit until I get another dividend, and possibly, if I could, I would buy something like Apple or Visa with that money, but we'll see. I could purchase a share of Google as well. Just depends on where the stocks are at when I get paid that dividend. Next, we've got Realty Income jumping into the monthly dividend payer at $52.32 today. Of course, it will fluctuate because the market is still open, but I have 170 shares, right around $8,900 worth of market value. Average cost is $65.03. 17% of the portfolio is in Realty Income. Today we're up $26. Total, we're down nearly $2,200. We have a 19.5% loss for total return on Realty Income, with a dividend coming in on the 15th of March. So here in about 8 days, I'll get $42.58 added to my brokerage. I love dividends. You gotta love the monthly income. But the reason I'm not worried about being down on this company is the steady cash flow, guys. I love real estate, but I don't want to own a property. I don't have expertise in that field, so I own Realty Income. So next, we've got CocaCola. This is one of my favorite positions, my favorite company in the entire world. CocaCola, I have 15 shares. Really wish there was a zero at the end of that. But I have $900 of market value as of right now. Average cost is around $61 per share. 1.71% of the portfolio is in Coca-Cola. Today we're down $1. Total, we're down $16. We are down about 2% on Coca-Cola. I will be adding to this, but I want to add to it at a bigger dip than is available for me right now. Next, we've got Altria. Now, this one is up a little bit. Good to see it. 320 shares, $13,000 worth of market value. Average cost is $47.27. 25% of the portfolio is in Altria. Today, we're up $48. Total, we're down $1,814, down 12%. But guys, this one is a sin stock. People hate it. It's always down. I'm not worried about it. Altria's true value to me is giving me cash flow that I can reinvest at other places for higher rates of return. So as of right now, Altria pays me about, say, $310 per quarter. And with that money, I could buy nearly 2 shares of Apple at this point. So that's what Altria is going to be doing, is buying stocks on a discount. So even though I'm not purchasing Apple right now due to how high the stock price is compared to my average cost, I still would like to buy it in the future. And it is comforting to know that whenever I want to, after 14710, I could just buy myself a share of either Apple or Visa whenever I want, or Google. Not quite there yet for Meta or Berkshire, but we'll get there. But that's the main purpose of this stock, guys, is to just keep building cash flow and dividend income. Eventually, it's going to be paying my rent. Then we've got Apple, my second favorite stock in the entire portfolio. Really, it's my favorite stock in the world. If I didn't love Coca-Cola so much, Apple would be the number one stock for me. I only have one share at $170 of market value. Average cost is $132.66. 0.33% of the portfolio is in Apple. Today we're up $1.43 total. We're up around $38. Have a 28.5% return. Guys, I want to add more to this position. The only reason that I haven't is because the stock price is so high that I don't want to be purchasing it at these levels, but I will be adding to it relatively soon. If I can get it down to 130, I will be adding more. And peace of mind for that is, like I said, Altria is able to buy me about 2 shares. It'd be $280. So I do have enough dividend income coming in January to be putting it towards Apple and adding 2 shares. So next we've got ABBV, 95 shares, $17,000 in this position. $95 is our average cost. About 33% of the portfolio is in ABBV. Today we're down a little bit. Total, we're up $8,100, up nearly 90%. This is by far my best investment. This is triple my Apple return, which is awesome. But this is my best performing stock. The dividend has grown exponentially since I bought it, and this was my first arbitrage deal that I ever tried to do. So I need to look for more arbitrage deals because I got a 90% return on my first one. So once I have debt paid off, it'll be a while, but once I get my debt paid off, I'm going to get my emergency fund where I want it, I will be looking for more deals like ABBV. Now, the difference is in some of those arbitrage deals, like let's say I did the Activision Blizzard one where Microsoft bought it, and I didn't want to own Microsoft. Say I didn't want the company after the acquisition was through, I just sell it. But I did believe in ABBV long term. I did believe in Microsoft too. I did think that would go through, but I just didn't have the cash at that point in time. But I will look for more arbitrage deals and try to be very selective on what I put my money into for an arbitrage deal. But I do have some ideas that are down big. I've shared a couple of them, like Hershey or Dollar General. But once I get my finances in order, I will be looking for those types of deals, and I'll be sharing them with you guys when I do those as well. But ABBV overall, about a 90% return. Really happy about it. It's exceeded my expectations and my thesis and analysis when I did when I initially bought it as well. So nothing but positive things to say about ABBV. Next, we got T. Rowe Price. Now, this one was kind of a down darling for a long time because the COVID issues, and given that the Fed just boosted rates to 5%, a lot of stocks, not just T. Rowe Price or asset managers in general, not just that sector, but a lot of companies saw people go out of their stocks. I remember seeing the PepsiCo CEO. There was quite a few of them that I saw on a CNBC interview talking about how people were just looking for a higher rate of return guaranteed, so they were getting out of stocks and going into money market accounts, and there's nothing wrong with that. But the only issue I have with that, and why I didn't do it, why I didn't take my money out of stuff like Apple or even Realty Income, stocks that don't have a less than 5% yield, is because I want to own those companies. I think over time, the people that sold out of the market are going to regret it, because I think overall they're going to get a higher return than 5%. So I understand the appeal of getting out and getting a guaranteed 5% return, but you're missing out on that company's growth as well. So I don't know how well PepsiCo is going to grow. I don't know how well overall T. Rowe Price is going to grow, but I have faith that it's going to, and I've analyzed the company, and I'm very happy holding it, and I think overall it will give me a higher return than 5%. The dividend yield is like 4.2% right now, 4.2%. So really it needs to give me a 0.3% return year over year, and if you look at it already, it's done that. So I think that short-term people were thinking about getting out of the, people who thought about getting out of the market and actually went through with that decision, I think they're going to get bitten overall, and their returns are going to be guaranteed 5%, but I think staying in the market, they would make more. So I didn't want to make that same mistake. But I do love T. Rowe Price. It's going to be buying some CocaCola shares. So for the portfolio, Altria is going to be purchasing Apple because it's the second set of months. Then ABBV will be purchasing T. Rowe Price for now because it cannot afford to buy a share of Visa, but free cash will buy Visa. And then T. Rowe Price is going to buy Coca-Cola. So my current highest level investments for the amount of capital that are in them are going to slowly but surely become smaller positions. I'm comfortable with the positions that I have. Obviously, otherwise I would have sold out of them given how big they've become. But the reason that companies like ABBV and Altria are so big is because they've gone up since I bought them. So I'm not worried about it. Same with T. Rowe Price. For a while it was down, but I think over time it will go up. So I'm excited to see where the stocks run. But that is not where the portfolio ends. I also have stocks that I'm looking into, which first off is Visa. So this is one that I literally just used. I just went to the grocery store yesterday. So anytime I swipe my card, I'm paying this company. Anytime anybody who has a Visa card swipes their card, they are paying Visa. So this is one of those no-brainer stocks that I should have held for the long term. I bought it in like 2018 when I first started investing, when I had no idea how to analyze a stock. I understood the business, but I didn't look into it, right? I didn't look into the numbers and the margins and stuff like that. And the return on investing capital. So I want to own Visa, and I will own it by the end of the year, guaranteed. This is one of, if not, this, I mean, in the portfolio, I think this is the highest quality company. So I think Apple is going to be my biggest position, then Visa, and those are interchangeable. I think over time, I do think Visa will overtake Apple as the biggest position simply because it's got such high margins and it's such a well-run business. Sorry about the phone call there, guys. But I do think Visa will overtake that. So Visa will be one of the biggest positions in the portfolio. I just want to buy it near the probably like, I would say probably around, I don't know where the 52-week low is. Yeah, I would want it around like 220, 230. So I'm going to be sitting for a while and waiting on Visa, but that's okay. I have other opportunities that I can jump into. Next, for the growth portion of the portfolio, I do want to own Alphabet or Google. I want to own it. So I buy it at this price. Honestly, when T. Rowe pays me this month, I plan on buying some Google, so I'll own that probably before the end of the month even. But I'll explain why. So they own the app you're technically using right now to watch this video. They own YouTube. They own Google AdSense. So they own Google TV, YouTube TV. So they have a lot of revenue streams plus their search engine, which I didn't even mention yet. And they have the Pixel. So they have multiple avenues that they're making a lot of money with. And they're very good at investing their capital, a lot like Visa, high margin business. So I want to own it. And I think this, even if it's not the company that I have the most amount of capital in, I think it will be one of the top 5 positions in the portfolio, top 3, top 5 positions. Then, of course, we have got Berkshire Hathaway. This is a no-duh company that I should have bought right away. I've gone to multiple Berkshire meetings, love many of the subsidiaries that they own privately. See's Candy is my favorite candy in the entire world that I've had thus far in my life. Geico is a superbly run insurance company, and I would rather own that than Aflac, Chubb, or Travelers, which are all Allstate, which are all companies I've either owned or looked into. So insurance-wise, it's my favorite. They own my favorite candy company in the entire world. And of course, they have other investments as well. They own a lot of privately owned businesses, as well as they own a huge stock portfolio, which Apple is the biggest position in. And I believe it's like CocaCola, American Express, Kraft Heinz, I believe Chevron was on that list too. So they have a lot of quality companies. And I know Munger passed away, but eventually Warren will pass away too. But I think that the culture at Berkshire will live beyond them. And just because somebody else is running the helm at Berkshire does not mean that those companies are going to stop losing money. I mean, Buffett has said it for years. The day he dies, people are still going to be buying Geico. People are still going to be getting insurance. People are still going to be cracking open a Coca-Cola. People are still going to buy See's Candy. The fact that he runs the business is not, it's important. I know that's why a lot of people want to own the business, but him passing away, Charlie passing away, does not stop those businesses from making money. And I think when he does pass, we'll see a pullback in the stock. But I do think for the long term, it is going to be one of my favorites. I've been to multiple Berkshire meetings. I watch them all the time. Love the company. And eventually I will own it. Then, of course, we got Meta Platforms, which this one is way up because they announced a dividend. They did cost cutting. They've been more profitable. So Mark Zuckerberg's been running the company very well. I do want to own Meta. I believe in them long term with the ad revenue. And Metaverse, not so much, but I'm glad that they did that because the misstep gave a lot of investors a really good opportunity to jump into the stock and get a really good return. So overall, guys, I think the portfolio for position-wise, I do believe that it's going to go Apple, Visa, Coke for dividends. But overall, I think the biggest position is probably going to be Berkshire. So it'll be Berkshire, Apple, then Visa, then Meta and Google, and then Coca-Cola. So eventually, I think that these growth stocks will be the biggest positions in the portfolio, and I'm looking forward to getting some cash in at the right price. The only reason I haven't bought Meta in Berkshire is because of the price. So I will be patient and allocate capital when it makes sense for me. But with that being said, guys, thank you so much for watching. Remember to hit the subscribe button on my channel, That Dividend Guy, and leave a comment down below. Let me know what stocks you guys are looking into. Let me know if there's anything that I've missed. I know I've done some videos on stocks that I've looked into, like Hershey's or Dollar General. If you want more of that, let me know down in the comments. Thank you guys so much for watching, and I'll see you guys tomorrow with another portfolio update. Take care, guys.